Welcome back. President Trump loves to boast about the stock market hitting new record highs almost weekly, and it is good news. Corporations are focused on the bottom line. Profits are up, so are stocks. Happy is the market. Pleased is your 401k. But what about the opportunities and wages for the workers who make the products that the corporation sells that contribute to the revenue that makes the stockholders happy? Joining us for more is Kevin Cooper, the president of the Sarasota Chamber of Commerce, Mariah Evie of Career Edge, and Michael Snipes, an economics instructor at Sarasota, USF Sarasota Manatee. Thank you all for joining us. So, do I have that about right? That a lot of our viewers are thrilled that the 401ks are really doing well at this point. That's good news after the recession in 2008, but it's really not translating yet to jobs that are paying enough for a lot of folks to live, especially on the Suncoast.
Sure, yeah, and it's great that we have growth in the stock market. Represents greater investment overall in the economy, but it's not really going to help us out if we don't own any stocks, if we don't have a 401k, if we don't have any assets like that. Any growth in the stock market's not really going to affect lower income individuals who may not have any investments or retirement plans or anything like that.
Let me phrase it this way. I even asked your predecessor at the Chamber of Commerce this very question: when are wages going to start catching up to the rebound in the stock market?
Well, with the stock market question, I think it's important to understand how the stock market figures are calculated, and I think the headline figure is the Dow Jones Industrial Average. There are 30 constituents in the Dow Jones, so it's a measure of how well these 30 companies are doing. So I think when you look at overall the stock market and corporate profitability, that isn't necessarily representative of what's happening here on the Sun Coast. And so I think it's more important to get out there and talk to local companies and understand the profit margins they are doing, because there are a lot of companies that are still recovering from the Great Recession at a pretty slow pace and seeing things bounce back. It's good to see these 30 major privately held corporations doing well, but the stock market doesn't necessarily translate back down to what's happening here on Main Street, Sarasota.
Why are they struggling still?
I think there's a lot of different things. I think there's uncertainty from a political standpoint. I think there's consumer confidence that goes into it. So I think it's not necessarily that they're struggling. I just don't think that everyone's experiencing the boom that we see at a 22,000 Dow Jones Industrial Average. That's not necessarily happening at your local retailer or your local restaurant. The profit margins aren't necessarily there to go, well, why isn't it trickling back down? It's good to see the jobs are being created. The labor market is tight here. You're seeing about a 4% unemployment rate. So people are creating jobs. Things are moving better. But I don't think it's necessarily you look at the stock market and go, well, why isn't it happening here? The stock market isn't here.
Maria, we saw in Ray's story that there are employers out there that are hungry for workers. In some cases, there are not enough available workers out there for the jobs that are available. What are you seeing in terms of the people that you represent and the companies that are looking for help?
Yeah, I think that what we're seeing is that a lot of employers are looking for talent. Talent's different. The jobs have changed. They're more technology jobs today. A lot of jobs need post-secondary education for the individuals that are going to work. But we do have jobs, but we do have a lot of folks that are going back to technical school. They are getting the trainings that they need so they could enter into the workplace. Another thing that we're doing is we're working with the technical schools to work on fast-track programs so we can get individuals into jobs with apprenticeships so they can get in there faster but continue their education as they're working and they're earning money.
That's important because I've noticed a lot of these jobs that are out there, you need some kind of certification, even if it's involving software or computer programs. Even if you're doing social media, there's certain certifications, and that is not something that everybody trying to transfer has.
I think that's one thing that could represent is an opportunity for employers, right? If an employer offers to pay to retrain their workers, then that's going to be a more attractive job. You're going to attract better talent. So if employers kind of view this as an opportunity to say, hey, come work with us, we'll provide you the training we need, that should attract better employees.
All right, we are just getting warmed up. We'll have more on the local labor market right after we check the first alert forecast. Stay with us. We're talking about the state of the labor market on the Suncoast, and joining us right now is Kevin Cooper, the president of the Sarasota Chamber of Commerce, Mariah Evie of Career Edge, and Michael Snipes, an economics instructor at USF Sarasota Manatee. And Kevin, there is another point that you wanted to make when we were talking about wage disparity here compared to other parts of the country.
I think that, and the question you posed is a bit about when we're going to catch up. And I think if you look at over the past 20 years, average annual wage growth in Sarasota County has gone up by about 83%. In the United States, average annual wage growth has gone up about 85%. So we are trending relatively similar to what you're seeing across the United States in terms of wage growth. And it's important when you look at wages, because really what we're talking about is take-home pay. And we're really blessed here in the state of Florida. No state income tax, no county income tax, no city income tax. So when you look at wages, really the important thing is what we're talking about is what people come home with at the end of every paycheck. And I think it's important to keep that in mind. And when we look at comparatively what's really happening for folks.
Michael, when you're talking about trends, are you seeing this not only around here but across the country, the issues that Kevin Kevin is talking about, that the stock market is doing quite well, but that economic recovery and the factors that allow companies to pay their employees better, is not really catching up in terms of many companies, large and small?
Sure, and I think there's a couple different ways you can answer that question. The point that you brought up earlier, that when we're looking at the stock market and kind of the metrics that we use to measure the size of the stock market, we're looking at 20 companies. So we're looking at a very narrow slice of the economy. But in terms of kind of how that translates to the rest of the country, I think one of the things that we need to look at is also what's not necessarily just happening with increases in wages, but also what's happening with increases in prices, because that's really what we as consumers, what we really care about is, it's great that I've got more money in my pocket, but does that necessarily translate to me being able to consume more, right? And when we look at our local area and how it compares to the rest of the country, prices for a lot of things are going to be pretty comparable. And we were talking over the break that one of the things that might actually be kind of skewing things here locally would be the housing market. So the housing market prices might actually be making kind of real wages, so to speak. So the amount of things that people can buy might actually be going down, but that might be really driven by one specific industry.
But I would also imagine another factor, we were also talking about this in the break where some of our best conversations happen, is the cost of health care. And that health care is rising so much, even if you have employer-based health insurance, that the real effect is that many employees are taking pay cuts every year as their premiums go up.
And the number one cause of bankruptcy in the United States is because of healthcare costs. And so as those costs continue to grow, it's going to put an ever-increasing burden on lower wage workers especially, who may not necessarily be able to afford healthcare.
Well, let me ask you this question, and it's a point that Michael brought up earlier in terms of what companies can do to get more and better qualified employees is to pay for and arrange for the certain certifications you need to do certain kinds of work. Are companies doing that more and more? And if they're not, why not?
They are doing it more because it's a critical need for their organization to have qualified employees working for them. So they are investing more in their employees, and a lot of them are looking at career laddering tracks for their employees, because then they have quality work and they're able to expand their markets, because employees now can, work. They're more qualified now to be able to do their jobs, because a lot of employers, they may need less employees today than they did a while back, because technology and equipment is replacing some employees. So employees need to be higher qualified to do those jobs. So they are investing in their employees.
Are there certain areas of the marketplace where the number of available employees are really, it's almost dog eat dog? And the reason why I asked that question is I read a great story by Mark Gordon in the Business Observer about a large company in our area that hired an executive search firm to get senior level executives. They got them, but at the same time the search firm took some of their employees, and it kind of underscored how difficult it is to fill some of these positions.
Well, it depends upon what kind of positions we're looking to fill. There's lots of jobs available in Sarasota and Manatee County, but it may not necessarily be the higher income jobs. So there's a lot of growth in the jobs in the construction industry and the service industries and things like this. Those tend to be lower paying jobs, and so if that's where we see the job growth, that's one thing that might skew some of the numbers that we're seeing in terms of income.
Right. Again, at what point do we get to that even those kind of jobs, whether they're in the construction industry or the service industry, where the pressure to fill these positions is going to result in higher salaries?
We're already seeing that. Because it's supply and demand, right? So when employers are competing for talent and students that are coming out of programs with the certifications, they're interviewing at different places. So starting off, an employee looks at salary. What are the benefits? What's the salary I'm going to make? So employers are very aware of it. So we're starting to see salaries increase, whether you're talking in construction or trades, because they need the qualified employees, because that's how they build their businesses with quality service to their clients to be able to get more business.
Kevin, you have your finger on the pulse of the local business community. What are business owners telling you in terms of jobs and their ability to fill them and salaries?
Yeah, the labor market's incredibly tight right now, and I think it's a confluence of a couple factors. One, I think it's important to understand that in Sarasota County, our workforce participation rate is much lower than the state of Florida. It's much lower than the United States. I think in the United States, the workforce participation rate is like 63%. State of Florida, it's like 58%. We're 50% here in Sarasota. That means 1 out of every 2 working age people aren't interested in being in the workforce. It probably plays a lot to our retiree-based population, so that's tough to begin with. But the second piece is, and it goes to Maria's point about people investing in their employees, it's about what is the skill set. Even in the peak of the Great Recession, when you saw 11% unemployment, there were still jobs looking for people, and they simply could not make it work. And that's kind of becoming more broad as the unemployment rate goes down and as the labor market becomes more tight. Insurance firms are looking for people. Construction firms are looking for people. Restaurants, hotels. It is not symptomatic to any one industry. Right now, there is a labor market tightness across all industries.
Michael, in your opinion, is there anything that you're seeing out there that could even threaten where we are now in terms of jobs and salaries and how companies are doing?
Not necessarily. I don't necessarily see any reason to expect any kind of slowdown or downturn in kind of a big macroscopic view in a countrywide sense, and especially here in Florida, where we've got a tourism-based economy, and we're always going to have tourists coming down here for the beaches. There's always going to be opportunity to have jobs in those specific sectors. So I don't necessarily think that there's any reason to expect any kind of big downturn or shift in the market because of the type of market that we have here. We have a service-based economy. We have a tourism-based economy. I wouldn't necessarily expect that to change anytime soon.
One last area, and we were also talking about this in terms of the availability of mass transit to get people to these jobs. We're not real good at mass transit around here, and is it something that is preventing people from being able, who are getting, have or being offered these lower paying jobs, actually getting to and from work?
That is a big issue. Transportation is probably one of the biggest concerns that we hear about. And because our county is, broad, whether you're talking from Northport, coming to Sarasota, working, and it is an issue of, because it's insurance, it's a car cost, there's the transportation cost to a family, and we do not have enough of buses that get people there in the time that they need to be there.
And Kevin, I would imagine that the problem with this is, unlike other larger metropolitan areas that may not have good mass transit but need it, we don't have the same kind of population, let's say, that a Tampa or Orlando or Miami has.
Yeah, I think there's 2 things that are important for this point. One is the density of the population to actually make it work and actually make it feasible. But I think the need for transit points to the point of when people are able to live near where they work. The need for transit is really peaked because of that. And I think it goes back to some of the issues that Michael raised about the purchasing power. The average price of the automobile over the past 20 years has gone up about 33%. Inflation's seen it's go up 53%. Housing has gone up 150% in Sarasota County. We simply have an affordable housing issue where people are not able to live close to where they work.
Okay, we have to take a quick break, and we'll come back for final thoughts when we return. We're talking about the local labor market. Our guests join us right now for final thoughts. So Michael, in terms of the trends you're seeing, in terms of the available jobs and salaries, that are good enough for people to take them and make a go of it, what do you see going on?
Well, I think it's important to kind of take a big picture approach to things, right? So looking at the health of the stock market is just one piece. Looking at average incomes is just one piece. Looking at labor market participation, that's just one piece. So we tended to focus on one particular number and just kind of beat that number to death. But we need to take a more kind of holistic approach to what the labor market is actually looking like in order to kind of address where things need to be fixed. And so I think taking a bigger picture approach is be prudent.
Maria, what are your clients telling you in terms of the available jobs out there and whether or not that they will pay enough for them to actually make a living on?
Well, the jobs are out there. It's the issue is not that the jobs are out there, is do they have the skills that the employers will hire them to go into those jobs. So what we hear is that employers, they're not pickier, but they want to stick more with their job descriptions, and going in, they want individuals that have the skill set that they're looking for.
You know, and Kevin, you know, Michael was telling that you have to separate some of these issues. But still, there are a lot of people who are watching this tonight who are hearing every night on this broadcast and others about the roaring stock market, and they're still struggling to make ends meet here. And that's the reality that a lot of people on the Suncoast are dealing with.
Yeah, but I would tell you to look around at that question and look at how many people, how many businesses in Sarasota County are on the Dow Jones Industrial Average. 0. And so it would be fallacious to look at it and go, well, this is going really well, you know, therefore we should be doing really well. And I think the Suncoast is really bouncing back. I think we are doing well. I think it's a little, you know, it might be a little misplaced or challenging to make the connection, and I think Michael talked about it, because there are so many different factors that go into it. It is a confluence of events, many more than we've even touched upon here tonight, that really give us a full, accurate picture of what's happening here and what we can expect in the next 5, 10 to 20 years. But the upside is jobs are being created. We have a high demand for highly skilled labor, and we can make it work here, and so we're moving in the right direction.
We'll have to leave it there. FYI, you can watch past discussions. They're on demand. They're available on Apple TV, Amazon Fire, and Roku. We want to thank our guests for being here tonight. Kevin Cooper is the president of the Sarasota Chamber of Commerce. Maria Evie is with Career Edge, and Michael Snipes is an economics instructor at USF Sarasota Manatee.